Powell sends markets into a tailspin. Hold on to your hats, folks, because Jerome Powell just sent shockwaves through Wall Street. December 2024 will be remembered as the month the music stopped, the month the Fed chair threw a bucket of ice water over the market's red-hot rally. It was a bloodbath out there, folks, with the Dow, the S&P, the Nasdaq, all of them taking a nosedive. What happened? The Fed cut rates, but not enough. Investors were expecting a bigger cut, a clearer signal that the Fed had their back. Instead, Powell and his team signaled a go-slow approach, a move that left Wall Street feeling abandoned, betrayed, and downright terrified. It was a classic case of the Fed giving with one hand and taking away with the other. Sure, they lowered rates by a measly quarter point, but their projections for 2025, they slashed those rate cut forecasts like a butcher carving up a Thanksgiving turkey. Investors were expecting 4 cuts, hoping for 4 cuts, but Powell only promised 2. The message was clear. The Fed is tapping the brakes, slowing down the money train. And that, my friends, sent a chill down the spines of investors everywhere. Let's face it, folks, the market had become addicted to rate cuts. Like a bunch of junkies hooked on cheap money, investors had come to rely on the Fed's easy money policies to fuel the rally. Every time the market hiccuped, every time there was a whiff of bad news, investors would start clamoring for a rate cut. And for a while, it worked. The Fed, under pressure to keep the good times rolling, kept the money flowing. But like any addiction, this one couldn't last forever. The market became complacent, overconfident, believing that the Fed would always be there to bail them out. But here's the thing about addictions. They always end badly. And that's exactly what we're seeing now. The market, hooked on rate cuts and used to getting its way, is throwing a tantrum. It's like a spoiled child who's just been told no for the first time. This reaction, this market meltdown, tells us one thing. Investors had become too reliant on the Fed, too complacent about the risks. They had forgotten that markets go down as well as up, that there's no such thing as a free lunch, and that the Fed isn't their personal ATM. Now let's talk about Jerome Powell, the man at the helm of the Fed. Powell's a smart guy, no doubt about it. But when it comes to communication, he's about as clear as mud. He's cautious, measured, always weighing his words carefully. And that, my friends, is driving the market crazy. Investors crave certainty. They want to know what the Fed is thinking, what their game plan is. But with Powell, it's like trying to read tea leaves. He speaks in riddles, drops hints, but never quite gives a straight answer. His press conferences are legendary for their market-moving potential. One minute he's sounding dovish, hinting at more rate cuts, and the market rallies. The next minute he's talking about the strength of the economy, suggesting that rate cuts might be on hold, and the market tanks. This lack of clarity, this constant back and forth is creating a breeding ground for uncertainty and volatility. It's like Powell's playing a high-stakes game of poker with the market, and investors are left guessing what cards he's holding. Section 4, Trump Card. How the new president could make or break the economy. To add fuel to the fire, we've got a new player in the game, President Donald Trump. Love him or hate him, there's no denying that Trump's policies, his tariffs, his tax cuts, his unpredictable pronouncements, have injected a whole new level of uncertainty into the economic outlook. The Fed, already walking a tightrope trying to balance growth with inflation, now has to factor in the wild card that is Trump. Will his policies juice the economy, leading to higher growth and inflation, or will they backfire, triggering a recession? The jury's still out, but one thing's for sure. Trump's policies are adding another layer of complexity to the Fed's already difficult job. It's like trying to solve a Rubik's Cube while riding a roller coaster. And then there's the potential for conflict between Trump and the Fed. Trump's made no secret of his desire for lower interest rates, even going so far as to publicly criticize Powell and the Fed for not being accommodative enough. This kind of political pressure only adds to the uncertainty and makes the Fed's job even harder. Section 5, 2025, a year of uncertainty for investors and the Fed. So what does all this mean for 2025? Buckle up, folks, because it's shaping up to be a bumpy ride. The economy's strong, but there are storm clouds gathering on the horizon. Inflation is lurking, trade tensions are simmering, and the Trump wildcard is always in play. The Fed, caught between a rock and a hard place, is trying to navigate these treacherous waters with one hand tied behind its back. They're data dependent, they say, which is another way of saying they don't know what they're going to do next. And that, my friends, is the crux of the problem. We're in uncharted territory, facing a future full of unknowns. The old rules may no longer apply, and the Fed, once seen as the all-powerful master of the universe, is looking increasingly powerless to control the forces at play. So, what's an investor to do? Stay tuned, folks, because this story is far from over.